Hello everyone. It's really nice to be able to record another one of Forex trading videos after a long time of hiatus, not from trading, but actually from recording videos and posting them on YouTube or other platforms. I'm going to do this in series of two videos. The first one would be an update on what the heck I've been doing in the last, God knows, like 2 or 3 years of not posting videos, what's been happening with my trading. Um, so this is going to be that video, and for the strategy that I'm using for initiating any of these trades, I'll make another video to explain in detail how each one of the trades are buy or sell are run. So let's start without any further ado. The first chart that you're looking at is USDZAR, which is an exotic pair, but it's a beautiful chart. If you look at the price action, it's beautiful. And if you notice, contrary to what the default MetaTrader settings are, I have gotten rid of all the grids here, so we can focus solely on price action and price action only. And what does price action mean? What it means is I'm not using any indicators, oscillators, any scripts, any machinery, anything non-human, except for simple movement of the price and a pair of eyes. So these are my only tools, and it turns out it works pretty well. It's a lot easier to do, and it's even more profitable than using all those fancy, you can see on some of the charts they have 10 different indicators. If this points up, down, and this one does this, has some divergence here, you will put a, I don't know, buy order. But here, as you can see, it's as minimalistic as it gets. And in the tutorial we'll get to something even simpler, which will be a line chart, but that's a topic for another video. So let's stick to candlesticks or bar charts, which is pretty much the default these days for trading. And let's have a look at this chart. This is the daily time frame of today, which is the 10th of April 2020. Starting from a bit back, as you can see, we have had an upward trend. I talked intensively in my previous video, Forex market and its unique structure, what an impulse is and what a correction is, and I'll do a quick recap about these two things. So what is an impulse? What is a correction? An impulse is the direction where the market is moving, and we know it in a traditional sense as the trend, and trend is your friend, so on and so forth. Correction is the rest that the market takes. It takes a break before it continues its previous movement, as you can see here, from this bottom to this top right now. It'll eventually probably go more up. Now this is a quick recap of what we did. So as you can see, I have a large number of orders already set up, all in profit for this pair. We'll get to other pairs later. I don't want to just see the good trades, the profitable trades. I'm not selling you anything. I don't have a strategy or book or video course or boot camp or anything to sell you. So you can rest assured that I'm doing it bona fide, pro bono, whatever you want to call it, just for educational purposes. And I'll show you all the details, all the failures, all the success, and we'll figure out together if this strategy works or not. And FYI, I've not checked my MetaTrader and my accounts for a very long time, because back in the days, back in 2016-ish, I was day trading, and I was trading on the hourly chart, and it would consume like 99% of my waking hour. I would wake up, place a trade, track it, wait for the macroeconomic indicators to come out, and just freak out and place orders, incur losses, and so on and so forth. But these days, just as the current virus situation dictates, just chill and let the market do its own thing, and I'll check once in a few months now, since I'm trading on a daily chart or a weekly chart, just to see if everything is going according to the plan, and if not, I'll adjust that. So how and why and when did I start these orders here? These are buy orders. So I went long on USDZAR. So I saw this upward movement. So this was the direction of the impulse. How do I know it's an impulse? You can draw a line from a previous bottom up to a top. Then you see some corrective movement. Corrective movement not only is more time consuming, which means covers less price in more time, which it did here. And in the previous video I talked about the angular difference here. So this angle is very smaller than this angle, which means for this movement, which is about 78% of the previous upward movement, it took drastically more time. So it tells you it's a corrective move. It's the movement against the trend. It's the opportunity to bide your time so that you can enter the market and follow the direction of the previous trend, which was upward. So in this market, we want to go up. The market is going up, we want to go long. So this is the first thing. This is the recap from the previous video. I noticed this upward trend, the corrective movement. One more thing, a new thing in my channel that I want to add. Another characteristic of a corrective movement. Because if you look at corrective movements, their look and shape is quite different from an impulsive movement. One, I just mentioned, the angular difference and the time difference and so on. Another is it has a lot of going down, going up, covering a huge portion of the movement it made in the previous step, going down again, going up, and it continues throughout the lifetime of the corrective actions. You see a lot of overlap here. As you can see, this downward movement, this downward movement, this downward movement, and the final downward movement, which we'll get to soon. There were lots of overlaps, which means the price in the downward direction didn't traverse much. Whatever downward movement it made, it corrected a significant portion of in the preceding upward movement. Then it made another downward movement. and cover a significant portion. And finally, at the end of the rally or at the end of the drop, it went all in, all out, covered almost 99%. And the final, they call it fake out, to get rid of all the buyers who correctly identified the trend was up, but placed their stop loss somewhere around here to just trap them out and then continue the movement up. So this is one major characteristic of a corrective movement: overlapping waves. Whereas here, as you can see, it just shoots up, especially at the end point of the upward movement. It was just a spike up. Let's switch to weekly time frame. You can see it more clearly. There was little to no overlap. So I thought it was worth mentioning this other characteristic of corrective movements. Now, so I saw this chart back in 2017 and I said, okay, there's some potential. And here in Forex market or any trading, investing scenario, we don't talk about certainties. That's for sure. That's already established. So if you're looking for something that works 100% of the time, you're looking at the wrong thing. In real life, nothing is 100% of the time accurate. Even 95% of the time, that's also not realistic. No matter how much information you gather, unless you're an insider in the central bank of, I don't know, European Central Bank or Federal Reserve or somewhere who has inside information, who knows when the rate drop is going to happen. You can capture a couple of ticks and make profit. Unless you're that person who's doing a not only immoral but illegal act, nothing is certain. If we can predict these things with 70-80% certainty, we're gonna not only be profitable but also make a huge amount of profit. So I spotted this trend, and right off the bat I said, okay, this is a beautiful corrective movement, let's capitalize on it. And as I said, what you do is draw a trend line. So the initial trend line, if you are, let me clear this out. If you are in, let's say, this phase of the movement is going down with overlaps and so on. If you are in this phase, you would draw this trend line. Probably, yeah. Something like that. We don't want to be too picky about where the trend line should be. You will draw this trend line, then you'll see this breakout, then you see another correction. As I said, longer time, takes longer, overlapping waves, the downward movement and the upward movement almost recovered 70-80% of the downward movement, then another one, lower low, and the higher low covered almost 90%. So you would say, yes, this is an impulse, this is an impulse, and this is a correction. And you're absolutely right. So let's zoom in or switch to a smaller time frame. Let's see how I'm just observing and doing this. I've not traded this one, but let's just do it for experimental purposes. So this is the spike you see. Trend line, longer term trend line broken. You see a breakout. It looks like an impulse. It does. Then you'll say, I wait for my correction, which happens. Overlapping waves here, covering 80%. Another downward movement covering 90%. And you'll say to yourself, all right, So this is my impulse, this is my correction. I'll draw a trend line here, and I'll buy here, let's say, and put my stop here. Let me get some text here to show you where you buy, where you sell. So you'll say I'll buy here, and I will sell, or put my stop loss here. And you have your strategy. You calculate, all right, this is about 8,500 points, so I want to go 8,500 points, somewhere around here. So this is gonna be the place where I take my initial profit. Since you have multiple orders, as you can see here, I'll check out part of my trade here, take the profit, move the stop back to the initial trading position so that it will be risk-free, then take another point and a half here, and if I have enough capital and I have enough trading lots, I can go on forever, incrementally closing, taking profits, and having fun. Now let's see what happened. So this is my plan of action. When this breakout occurred, the market went against me, so it was kind of stressful, let's say. Which you shouldn't be. You should not at all be stressful when market goes against you. This is just a game of probabilities. It doesn't have to work for you 100% of the time. It never will, and you have to deal with it or switch to another business. So this is what happened. I put my buy stop or order my long position here. Market went against me. I say, oh shoot. And then your stop is here. So as long as it doesn't hit your stop, you take no action. You don't want to be emotional. Then what happened was it fluctuated. It seemed like look how beautiful this chart is. It seemed like this was another impulse. As you know, as we have pointed out, and it's been pointed out in many books, Elliott, I don't know, probably Gann or other, let's say, fathers of technical analysis and trading. As it's been pointed out, market is a fractal. So financial markets are fractals in nature, and what it means is, in the daily time frame, I identified this giant corrective movement. Then I switched to the 4-hour chart, which is the chart you're seeing now, and I noticed I have this impulse movement inside the breakout of this huge corrective movement. Then so this is, let's say this is the giant order, giant framework, giant time frame. Then we have our middle time frame here, impulse, correction, breakout. Then inside this middle time frame we have another smaller time frame, let's call it a small time frame, which we have another impulse in the direction we are anticipating, which is up, up, up. We have another impulse. We have another corrective action. Let's look at the angular difference. Steep, sharp, shallow, corrective, correct? And it also checks out the point I made earlier in this video, which each movement in the corrective action is overlapping. Ellioticians call it A, B, C. Here we have A, B, C. We might have five waves of correction. They came up because it's like a pseudoscience. Elliott wave trading is a pseudoscience. Some people will get offended and attack me under this video. Thank you guys, but to me it's a pseudoscience. In the sense that, okay, they say corrective actions are 3 in nature, but we also have 5 in nature. Yeah, you can say there are also 7 in nature and come up with another terminology. So if it were 5 corrective movements here, they would call it, instead of A, B, C, they would call it X, Y, W, X, Y, X, Z. Then they will add a bunch of others. We don't care how many waves there are. 3, 5, 7, 9, as long as it checks out our criteria of 1, taking longer than the impulse, 2, having overlapping waves, then it is a corrective movement, no matter how many waves it has. So another important point to take into account. So let's go to our smaller time frame. We have an impulse, we have a correction here, overlapping, we have another buy signal here, right there. So we've already used, let's say, 1 or 2% of our capital to initiate a long position here. If you are feeling like trading or adding more, this is the place to do it. I'm sorry, I should put a buy signal here. Buy, we'll buy here. Where should our stop be? Stop sign at the lowest point of the current correction that we are looking at, which is here, this beautiful place. Where are our places to take profit? We calculate this portion, then we take off profit 101 proportionately, 101.5, 1.5, 2, and so on if the lot size allows it. Then our strategy says, soon as the price hits our first target, move our stop loss to the starting position so that you're risk-free afterwards. So right now we have 2 running orders, one in the medium time frame with the stop sign here, another in the smaller time frame with the stop sign here, and we'll wait. It's a waiting game now. We'll wait to see how the market performs. So we scroll. I can use, I guess, F12 to do step by step, little by little. Yeah, it goes against us a bit. We're panicking and so on, and as you can see, the rest is history. It's already history, by the way. So our first target is hit. This stop is moved back to the starting point to take profit. The second one is hit. Another good news. So not only we made 101, we risked 1 portion. We made a profit of 1 portion. We made a profit of 1.5 portion. And from our medium time frame, we hit a profit of 1 portion, 1 larger portion here. So for this trade, I'm break even and risk free for this one as well, because it hit our first target. So now I'm risk free. I've made some profit. Now I'll wait to see if the market will come down, stop me out, which means it's been a correction with overlapping waves that'll stop you out eventually, or is it then maybe an impulse? We'll wait to see how the price behaves. It seems like and we're depending on where our stop was, our entry was here, so we're not 100% stop. I don't know, you tell me. We're probably stopped out or not. It doesn't matter now. Now we're definitely stopped out. So we made profit, risk free, stopped out. Now what I do is, okay, I play my little game, I made some money. Now let's rinse and repeat. Let's look at the big picture again to see what happens. Because in the daily time frame, let's go back to the daily time frame. In the daily time frame, we had a breakout and it went down again. In the next video about momentum, I'll tell you how often this happens and how beautiful this structure is and how more certain than the strategy that we are doing right now. More certain it is that a change of direction is in place. You can look at gold right now to see what I'm talking about. I'll show you my chart of gold in a couple of minutes to see how beautifully I predicted the increase in the rise of gold and made substantial profit off of it. Then okay, so we hit another bottom. So apparently this trend line is no longer valid because it made a new low. So what do? I still believe, since it's taking so much time compared to this one, I still believe it's a corrective movement, but it needs more correction, needs more overlapping waves and so on. So I extend my trend line to here. I say, okay, this is our newest low point. This is our new trend line. Let's see what happens. What happened was it broke the trend line. So an indication that the reversal is in place. And I didn't delete this one. This is back in 2018-ish, 2018, beginning of 2019, when I initiated all these buy orders, which I'm in now currently. I didn't remove this line just to show you how I entered the market. So this is our new impulse. This is our correction again, going down, going up, covering a significant portion, going down, going up, covering 70-80% portion. So it's definitely a correction right here happening, and it broke out. It broke the trend line. So impulse, correction, break of the trend line, and we are in. So I place multiple orders in multiple places, locations, depending on different time frames, and your stop usually goes here. Your stop goes here. My stop is here, but this is a different story for another time. Then I waited. So it's a daily time frame. I waited. I checked it. I guess this was 2019. I guess 6 months later, checked it just to see. And 6 months later, it wasn't doing anything. It was just dragging about, walking around, doing nothing, dawdling and strolling. But then I guess I checked it today to see, yeah, it broke the all-time high, which was 17.14, hit 1926. So it made a new, I guess, all-time high. And this is what my original setup would have looked like. This is my entry point. Let me zoom in. I'm sorry. I am sorry. This is how my original entry looked like. Here's my entry. Let's be consistent. Come on. This is my buy here. This is my stop loss here. This is my first, let's say 101, first one here, which was hit here. And then if you don't want to be as conservative, let me adjust this. So first TL, the first profit is hit here. Move the stop up here, back to the buy position, and we're stopped out. Now have a look here, because I re-entered the market. I notice another impulse, another correction right here. We don't have to be very nitpicky about this. Impulse, correction, a deep correction almost to here, and a breakout. So you'll have your next buy order. This is where we got the juicy part, the biggest amount of profit. Stop here, and our check signs 101 around here, hit, move the stop back here. Now we're back in the in the trend position, trend movement. 1.52 hit, 3 hit, 4 hit. So if you have a calculator, you don't even need a calculator. Let's say we risked $100. We're playing small leagues here, not major leagues. Let's say our initial stop loss was $100 lost. Here we went home with, let's say we divided it in 5 portions. So it took out $20 of profit here. Then it's double the amount, so 40 here, 20, 40, 60. Then 60 here, 60, 60, 120. 80 here, 120 plus 80, 200, and we still have $20 worth of money going about here. If we see any price action that looks like this overlapping, we might want to add more to it. But we risked $100, and our reward right now so far with this conservative incrementally taking profit has been $200, and we still have another position running. So we're still in one position with profit, and we're waiting for it to eventually go up and higher because our stop loss is here. Let me go to the gold chart quickly before this video gets too long and you'll all lose interest. Just to show you the gold chart, which is pretty similar to this one. If I can find it quick enough, I can show it to you. Yeah, gold is here. This is the same thing with gold. I went long in gold, like it'll show here, probably a couple of years back. And when I did, so yeah, this is the peak of the gold in 2011, September 2011. Then started dropping. So what happened was, everybody was calling, okay, this is the bottom, let's go long. No, it wasn't. Now this is the bottom, this is the bottom. None of them appear to be true. Only one appears to be true, and most of the time it is lucky coincidence. The moment I decided I want to go long on gold was on a weekly chart, believe it or not. And I had a simple trend line from the very top, hitting this point, going all the way down, my old trusty trend line. Now let's go back to the daily chart. This is our major time frame. So it kind of broke out. I want more confirmation in this, just playing around with this. It kind of broke out the trend line and it went down. So I don't have my confirmation yet. But look how interesting this setup is. When it eventually breaks out a trend line, it tells you that okay, in the medium time frame, this has been your impulse because you're out of the trend line right now. Now this has been your corrective move because this move didn't violate the top over here. It went close, very close, like 95%, but it didn't break it, so it's within our standards. And this move didn't even have the momentum to make another low. So this is when I grab my trend line, drew one, impulse, correction, wait for the break of the trend line, entry right here, stop loss, lowest low right here, and you go into profit. The same scenario, the same strategy with gold. As you can see, it could have worked here. Impulse, correction, profit. So before all the coronavirus and all the pandemic hysteria was going down in 2017, 18, let's say. Yeah, in June 2019, before we even knew Corona existed, I was long in gold. Even before that, at a lower price. But that was a different strategy. Now they're justifying it, saying, okay, the whole globe is in shambles and all the countries major countries are struggling and this is a safe haven. Yeah, the news media have their own explain. They have to explain it some way. But how to explain this? Long gold, long gold, long gold. I don't know if I can figure it out here when I open this position. It doesn't tell me exactly, but let me get my so yeah, let's go with gold. Gold micro. So yeah, there we have it. I hope you see it on the screen. Yeah, the time 2018, 5th of 2018. So I went long 5th month in 2018 right here. Let's see look at the other positions. So yeah, 15th of the 5th month. What is the 5th month? I don't know. 2018. I'm not English. Don't criticize. Don't judge me. Another one was gold. The 3rd month. I know this one. This is my birthday. March 2018. March 2018. There we are. Another long here. And it kept going down. I added more. So there you have it. I guess this video is long enough for a follow-up on what's been happening so far. I don't want it to be a bragging video of how much profit I'm making. I want it to be a tutorial of how much money you could make, so you will have the incentive to take action, develop your trading strategy, do it preferably on a longer term, like 4-hour charts, daily charts, even weekly charts, and so you don't have to check your MetaTrader or whatever platform you're using account every single day, every single hour. Have a life, and at the same time make money trading or investing in the forex market and the commodities and so on. So see you in the next video. It was fun.